Welcome to the Outthinker podcast. Each week, we talk with forward-looking strategists and innovators that are challenging the status quo, leading the future of business, and shaping our world. I'm your host, Kyan Krippendorf, founder of the Outthinker Strategy Network. Ajay Banga is vice chairman at General Atlantic, which he joined after 12 years at the helm of MasterCard. He led the company through a strategic, technological, and cultural transformation over 11 years as president and chief executive officer and 1 year as executive chair of the board of directors. I got to see a little bit of the work that he did over those 11 years as he grew MasterCard's stock price from $30 to over $350 a share. Ajay began his career at Nestlé, India, where he, for 13 years, worked on assignments spanning sales, marketing, and general management. He also spent 2 years with PepsiCo before joining Citigroup, where he rose to the role of chief executive officer of Citigroup Asia Pacific. Over the course of his career, he's become a global leader in technology, data, financial services, and innovating for inclusion. Ajay also serves as chairman of the International Chamber of Commerce and is an independent director at Temasek and for Exor, where he serves as chair of the company's Environmental, Social, and Corporate Governance Committee. He became an advisor to General Atlantic's BeyondNetZero venture at its inception in 2021. He is a co-founder of the Cyber Readiness Institute, vice chair of the Economic Club of New York, a former member of the World Economic Forum's Edison Alliance, and served as a member of President Obama's Commission on Enhancing National Cybersecurity, and a past member of the U.S. President's Advisory Committee for Trade Policy and Negotiations, among many other roles he has served. In this podcast, he shares how, under his leadership, he was able to so significantly grow MasterCard's stock price, how to connect your company's message to a global purpose, what advice Ajay would have as a CEO for a chief strategy officer, and the best career advice he ever received as a CEO. Ladies and gentlemen, Ajay Banga. Ajay, thank you so much for being here with us. It's great to see you.
It's a pleasure to be here, Kyle. Thank you for having me.
So I want to give people an opportunity to get to know you a little bit personally. So I ask this question of all my guests. If you can complete this for me. If you really know me, you know that.
You would know that I'll always be there for you with a hand on your back and not in your face, meaning you will find I'm very devoted to giving people an equal shake and then let the best one win. That's kind of my approach to it. And that includes giving you an equal chance to win, but also being there when you have trouble. And I think you can't just give people a chance to win without being there for them when they have a problem. So if you really know me, you'll know I'll always be there for you.
Amazing. Where did that philosophy come from?
I guess I would like that to be how people deal with me. So, they say you've got to always behave with others as you would have them behave unto you. And I would like to believe that the people around me will always be there for me.
Great. The second question I also ask of all our guests, and most of them are strategy experts, and you've played some roles that have had strategy in them, and you certainly worked with strategy officers. So what's your definition of strategy?
Strategy is an enabler. We're talking about in a business context. They're an enabler for companies and businesses to actually get to an outcome. So if you don't channel resources, if you don't funnel energy in a company of thousands of people or even 50 people, you will find people going off in different directions. Strategy is a way to create a shining city on the hill for you to know where you want people to go and to define a way to climb that hill and to give them the tools and resources to get there. If you do that well, and if you do it with simplicity, and you do it with clarity, and by simplicity, I really mean simplifying it so the junior most or newest person in your company can understand it and can understand their role in getting you to the top of the hill. If you do that well, Kyan, then you have what I call strategy, which is shining city. How do you get there? What tools do you need? And let's go for it together. Otherwise, you get people climbing one hill and others going down the hill, people going one way up the hill, others going the other way up the hill, people deciding this is not the hill they want to climb, they're trying to climb a different hill. Those are the dysfunctional human interaction in a company, right? Strategy is the clarifying force.
Yes. I love what you're saying is that there's knowing that you have the right answer, a good enough answer, but having it simple enough that people can understand it. It's almost better probably to have an imperfect answer that people can understand.
Very good point. I actually think that a lot of people spend way too much time trying to figure out what the right answer is compared to figuring out how to make everybody comprehend what they're really trying to get at. Because I'll give you the example from MasterCard, right? We, somewhere along the line, pivoted the company early in my time as CEO, 10, 12 years ago, into focusing on cash as the enemy, not other electronic payment system. And there was a logic for that, and we can talk about that. But the point was, once that clarity of where the shining city on the hill was, cash, that you had to get to and depose from being the king of the hill, then the creativity of employees who've got great ideas of how to do it, some of which we will all embrace, others of which we reject. You don't empower that creativity. You don't empower that thousands of minds thinking and contributing to you if you don't simplify the city on the hill. I could have spent a lot of time redefining that cash thing to try and figure out the best way to say it. I don't know if that's time well spent as compared to, hey, we're going to go after killing cash. Now let's talk about it.
Love the simplicity of that can transfer all the way down and everyone can get that. Under your tenure, MasterCard's stock price grew from $20 to over $350 a share. And so I would love to hear from you a little bit about how you would describe the strategy or strategies that led to that. It sounds like it begins with a shift on knowing that the shiny house on the hill is cash. But what comes underneath that, or how did you describe it?
So you started knowing the shining house on the hill is cash, then you've got to figure out how to get there. And how to get there, we defined as 3 pillars to the strategy. And the first one was, because we had a history of 40 years by then of being an enabler of payments on a card, basically digital payments with a card. I mean, digital is not just with a phone. It's basically non-cash, electronic payments. And so I kind of told people the first task we've got to do is to grow that core business, meaning whether people choose to pay by credit, debit, prepaid or whatever, our job is to grow that business and to grow our share in that business. And so think of that as being pillar number 1. The core, the fundamentals.
Which really expands the scope of what your solution set can be.
Absolutely. The second was to diversify our client base. Because if you're going to go after cash, you couldn't go after cash with only the large banks as your clients, which was the prior methodology. You had to go to small and medium-sized banks all around the world. You had to go all around the world to countries they may not have been in. We were in many countries, but not in all. You had to think about transit operators and mobile phone companies and government agencies that create cash through their existence and accept payments through, so in and out of payments. You have to think about them as your clients. You have to think about merchants as your clients, not just banks. You have to think about airlines as your clients, Apple, Google, Amazon. You had to go way beyond the bigger banks to this rich spectrum that existed out there. So that is the second big pillar. Third big pillar was to build new businesses. Because my view was that the core payments business, as the years go by, over a decade or two, would tend to get compressions in its margins just because there was going to be a gold rush of everybody trying to get into it. Everybody tries to get into something, you will get competitive pressures. Competitive pressures, you've got to find other ways to grow. And so what did we have as assets? We had an amazing amount of anonymized data, anonymized because I don't know it's Kaihan who's buying something when he uses his MasterCard. I also don't know what you're buying. I just know a 16-digit account number, a dollar value, a merchant code, and a time of the transaction. But boy, when you put 50 billion of those transactions together, you've got a very strong predictive power. So if you can use analytics, cybersecurity, loyalty schemes, these are all adjacent businesses, adjacent to the core. And so the 3 pillars became grow the core, diversify your client and geography, and then build out these new franchises and businesses. And the foundation for all 3 was our brand, our technology, our data practices, which I think were very important. I think we were ahead of the curve on privacy and ethics in that space. But the most important foundation was the people. And we had to get those people to feel the power, like back to our earlier discussion. They had to feel the power and the passion of the vision but also of the role they would play in it.
Yes, I got you. And I think that relates to other things that I've heard you talk about, World Beyond Cash and the work that you guys did in financial inclusion. Could you talk a little bit about what those messages and efforts were and how they were both helping the world, but also it seemed to me they were helping the world and helping the company. So it was kind of a win-win.
The first one, World Beyond Cash, was just a scripted way of saying kill cash. I used to go around saying killing cash and a bunch of people who write, boss, can you change that and say it a little better? I still think kill cash, World Beyond Cash sounds politically correct. So, ignore that. The important question was the second, the one about financial inclusion. So somewhere in the process of this conversation, Kaihan, we realized that 80% of the world's retail transactions, forget about B2B, that's another amazing opportunity that now MasterCard is pretty focused on. But in those days, this is back 12 years ago, we were still talking mostly consumer payments. Mostly. 85% of them were in cash. And by the way, that was not just in the emerging markets. It was in the United States that more than half the payments were in cash. In Germany, 80% were in cash. So you've got German heritage. Germany was 80% cash. Japan was 75-80% cash. So it wasn't just a question of the development stage of the economy, although that was important. It was also the cultural attributes of the way people felt about electronic payments versus cash payments, of the way the infrastructures had got built, of the way the country worked and operated. So that is one big space. While we dug into that, we found that the single largest creator of cash in an economy was the government itself, paying its citizenry salaries, pensions, social benefits, the Veterans Affairs Office, Social Security in the United States, pensions and cash to government employees in the United States, all kinds of stuff into which the government is the primary source. Now, they're not 80% of it. They are 30% of it. But the thing is, they're the single largest. The other 50-something% is so many individuals that to make a difference to move that needle would take a long time. So we said, let's figure out the 30. And then we discovered that 2 billion people in the world were outside the financial system. They didn't have an identity. They didn't have a bank account. And by bank account, I don't mean a checkbook. I mean something into which they could receive money and transfer money on a phone, on a card, on your fingerprint, rubbing your forehead, whatever you like. Tend to think of bank accounts as, you got to go to a branch and open an account. No, any kind of bank account. They didn't have that. So now you can see the confluence of events. We want to go after cash. The single largest generator is governments. And by the way, it's to disseminate benefits to their citizenry. And guess what? 2 billion citizens in the world out of 7 don't have a way to get that stuff into an account. Therefore, they go and get it in cash. In the United States, Social Security checks were being mailed out that people would take to a check casher, to cash, to get their own Social Security money. They can't afford the 6%. So that's just an example in our own country. I could give you far more complicated examples. And so there's a UN study that says that 42% of the money that governments would like to disseminate to their citizenry, either in the form of cash or in the form of in-kind aid, doesn't actually reach the citizen. It gets lost in the way in what they call leakage, which was theft. And so when you put all that together, we concluded that it's not only good enough for us to talk about Kaihan and Ajay, who can afford to have a bank account and have an instrument to pay with, and somehow incent us to use that more and use cash less. Interesting, but it won't change the dialogue. It won't move the needle in the world. To move the needle in the world to fight cash, we've got to go after this excluded person, bring them into the system, let them feel the power and the pleasure of not being disintermediated in 42% of their own money or 6% of their Social Security check. Let them feel that makes them come in control. Give them an identity, give them the means to live their life, and then see over time as they migrate into using their electronic payments the way Kaihan and Ajay do, then eventually MasterCard will benefit. And that's the virtual flywheel, bringing commercial solutions to societal problems where you can do well and do good at the same time. That is what unleashed the passion of our people. Interestingly enough, it wasn't about the technology. It wasn't about paying cash. It wasn't about growing the core or diversifying the client base or building new businesses or the brand or the technology or the data. Those were all interesting. Don't get me wrong. But what really engaged people was, man, we're on a mission to do well. and do good at the same time.
Wow. How did you know that it was starting to ignite people? What did you see?
Oh, I had no idea I could do this. I was just following the logic of the city on the hill and trying to get there. And somewhere along the line, I started finding the vibe of people really responding, engagement surveys in the company. I found people walking around with a sense of pride of what they were doing. When they went to a cocktail party in the evening, they weren't just being told, you're the guys who enable, payments and you collect money each time somebody pays. People started talking about us as being, oh man, I hear you're doing these cool things on digital identity, on giving people an identity in emerging markets. You're doing things in South Africa with social security payments. Oh, my payroll at Walmart came on a MasterCard. What the heck's that all about? Or, hey, I got my social security payment on an account which is enabled by MasterCard. I didn't know you did all that. And all of a sudden, people began to feel the pleasure of being wanted as compared to being seen the beneficiary of commerce. So we went from being the beneficiary of somebody else's work to being the creator of that work. That's what happened to our people. I kind of realized it over time, travel and engagement surveys, town halls and stuff like that.
Wow. I love that. Yeah, the quantitative and qualitative. I have so many questions I would love to ask about that, but we have other things to cover. And I know you're a busy man. Let's just go back in time a little bit and just talk a little bit about your career. And what was the best advice you ever got?
I think the best advice I ever got was from my my boss. He was my boss's boss. This is the guy who was the managing director for Nestlé in India when I was a young management trainee. I was 21 years old. I was thrown off the deep end to go learn how to do sales, travel between villages and towns and sell 3 pieces of Nescafe and 3 pieces of condensed milk. This is really at the other edge of stuff. Live off $1 a day, that kind of stuff. And this guy came on a trip with my boss's boss, kind of the area manager. And I was working with him and he took a shine on me over 2 days, which is great for me. He actually helped my career enormously. And then on the 3rd day, he tells me, he says, I have one piece of advice for you. Never take no for an answer. And I said, what? He said, no, just never take no for an answer. And he said, I'm not talking about unethical stuff, obviously. But when you have a good idea, it questions the way things were done thus far. Do not take an easy no and go away. Because remember, you're fighting installed ways of thinking. And I converted that, in my way of talking about that, is installed infrastructure is the enemy of innovation. So when you think about in our country here, it took us a long time in MasterCard's business to go from magstripe to chip and PIN, let alone to contactless. Whereas countries in Asia and Europe had moved to contactless years ago. We had terminals and cards issued. We had tens of millions of terminals and hundreds of millions of cards. And to change that is a lot of effort and money and cost. You don't think, why fix something that's not broken? Well, the other side of that is installed infrastructure is the enemy of innovation. And the simple way of explaining that is don't take no for an answer. Barry Ryan, who's the name of the gentleman, who was the managing director at Nestlé, terrific guy, an Irishman. I learned a great deal from him, and he taught me this. I remember him very well.
One clarification for our listeners. When you say we had an install base of terminals, we as Americans did. They're not MasterCard terminals.
Yeah, no, America, the American payment system.
Okay. So I'd love to get a little advice from you for our listeners. So these are people who are strategy officers or interested in strategy or doing strategy in some way. You've worked with many strategy officers. Do you have any advice for them? Either what does a CEO want to see from a strategy officer, or what can a strategy officer do? Because you've played strategy roles in Nestlé and PepsiCo, or you had roles that overlap with strategy, and then you went on to be a general manager and a CEO. If strategist has that kind of aspiration, what do you want to see from them?
So, Kyle, I think the first thing that gets you credibility in the system, not just with the CEO, it's also the others who are important in your success. And I think the first thing that gets you that is the willingness to be in the other person's shoes. So I think strategy folks need to spend time in their career, preferably earlier, if not later, rotating in and out of strategy into roles that their subsequent recommendations would influence how those roles are conducted. Once you do that, you do 2 things. One is you build your own knowledge for knowing how it really works as compared to what you get told. And second, you build the credibility that says it's on the basis of that knowledge that I'm telling you, we've got this amazing opportunity. So if you look at my career, I went through sales to marketing, and marketing in Nestlé was truly strategy. Product strategy, consumer definition strategy, technology strategy, distribution strategy, pricing strategy, promotional strategy, all came out of the marketing group at Nestlé. They were the people who did that. work, new products, new product development, that kind of stuff. So to me, I went there and then I came back into running sales. And then I went back into being a senior marketing and product guy. And then from there, I went to run a region and then I grew through that. So what I did was I spent time going back and forth. And as a result, when I spoke to my boss about what I thought could be a new opportunity in a product, an unfilled need, an unmet space, a new way of selling, a new kind of packaging, a new kind of way of distributing, I was speaking with the knowledge and credibility of somebody who had tramped the villages and cities and had worked with people in the field who understood what the problem was with the current packaging, who understood what the problem was with the current approach, who understood what the issue was with current pricing, and yet saw an opportunity for your unique value proposition that could be priced right and make good money. But if you just give me analytics and research and market research and blah, blah, and good bubble charts, like I don't really give a damn. You see what I mean?
Right. Absolutely.
This practical feet on the ground, back and forth experience, it's a longer route to success, but it is the best way to win credibility. And by the way, more than credibility, improve your own capability and your own skills, which finally is what this is all about. So that's where I was coming from.
Mm-hmm. Right. It seems that you're talking, in a way about influence and informal influence. Do you have any other tips for amplifying informal influence? Because chief strategy officers have to do that all the time.
Oh, yeah. It's all about influence. When you're a strategy guy, product guy, you don't really call the shots when the rubber hits the road. There are people who do that in sales, in factories who manufacture, and so on. I think the three things of influence that are very interesting, two of them start with an H. One is humility. So the moment you come across as the guy or gal from head office who's here to tell you what to do, you're dead, right? The last thing a guy out in, Singapore really needs is I'm from New York and I'm here to tell you how to do better work in your business. Now that's, yeah, right. Humility, the ability to learn from everyone, right? The ability to know that you don't know it all. And therefore that open-mindedness that comes with the humility, that. The second H is a sense of humor. And you know this, you and I have known each other. We both have a sense of humor. And you know that I can laugh at myself and at you. And that ability to deliver important messages without the sting of a difficult message, but with the ability to bring it across in a self-deprecating way, but also in a way that makes it easier to absorb. Humor, the ability to lighten a room, the ability to bring oxygen back into a room.
To land a message.
Very important. Yeah, so the first one, the humility, is about listening to people and not taking the oxygen out of the room by always being the guy who's talking. And the second one is about bringing the oxygen back into the room by creating humor and a lightness of things. And the third one is about having a sense of urgency. Technology is changing everything, and technology is changing the pace of change. And so you don't have a whole lifetime to do things any longer. You need to get to a decision. You need to listen to people. You need to take their advice, but you need to make a call. You're going to have to take a risk because of the speed of change. And so I think the third advice I would give people about influencing people is about showing that sense of urgency, but in a constructive way, which starts with humility and listening, goes forward with humor and bringing the oxygen back into the room, but always demonstrates, guys, we got to get things done.
Got it. How do you think about introducing urgency in a way? Because some people will retract from urgency, or urgency sounds like something is wrong, or that can move people away from action. Any thoughts on how you create the right type of urgency?
The right way to do it is not to say that things are broken. I mean, they might well be broken sometimes, and you should say they're broken in that case. But it's not always that things are broken. It is that the market's moving around you, and you have the ability to see that trend, and therefore you want to get ahead of it. And therefore, if you do it now, you actually could be the beneficiary of that trend, and you could drive that trend. I would say that MasterCard, with its conversation about killing cash, drove some of that trend. 12 years ago, people never talked about killing cash. Not in governments, not anywhere. Today, you will find a dialogue everywhere about the merits of electronic payments and digital payments to reach under-impacted people, to get better tax revenues, to reduce illegal activity. We seeded that with research reports and conversations in platforms of the World Economic Forum at different places where you could influence people. We seeded that. We were not the only ones. A lot of other people did. But I'm telling you, we were at the cutting edge. And urgency comes not just from things being broken, but from the opportunity of that shining city on the hill. I feel being positive is much more important than trying to fix broken things. Even when you're trying to fix a broken thing, as a CEO, do it with a constructive, positive bent of mind. Positivity will take you very far.
I love it. And the distinction is very clear. I have so many questions, but I know that we're reaching the top of our time with you. So I'm going to hit just a few of them. Getting back personal again, a little bit personal. How do you structure your day to be efficient? Because you achieve so much. Any tips?
I was pretty disorganized on my day, but I had 2 or 3 tips. And tip 1 would be I used to try and find a little time in the morning when I didn't have meetings. That was my time. I would catch up with some reading. I would catch up with emails that came in overnight. I would do that to make calls out to Asia because they were reaching their evening. The tip 1 is in the morning in a global company, keep a little time for yourself to catch up with stuff. Stuff's happening all over during your night. Give yourself some time to catch up with it and think calmly. And tip 2 was I started creating 15-minute gaps between meetings, half-an-hour gaps between meetings. If I ran over on a conversation with you, I wasn't feeling scrambled in my head about the next meeting. And so I had that ability to get up, go get a cup of coffee, just muse about what did Kaya and I just discuss? Oh man, these 2 things, they're pretty important. I shouldn't forget about them and make a little note. That ability to take a little time for yourself. Basically, all this is the category of take out a little time for yourself. The second piece was I used to prep for meetings. If you ask people who worked with me, and you know many of them, they will tell you I never came to a meeting underprepared. I would get material once, I would read it thoroughly, and rather than make people present the material to me, we would get straight into a good discussion. What happens is it's a productive discussion, and people know that you respect what they've sent because you've read it. You may not agree with them, but they knew I had read it because I would tell them why I thought so. So I think you have to give people the respect of reading their material thoroughly, investing time in it, and coming prepared to your own meeting, because then they come better prepared to their meetings and both of you flourish together, right? It's like to clap, you need 2 hands, right? So both sides need to do this. Your productivity is dependent upon the productivity of those who work for you and with you. And so you got to make them feel that you will pay attention to them. And those are 2 tips. Take a little time for yourself and give respect to the people who work for you for what they're doing for you. Give them the time, pay attention, prep, work hard, and come to it.
That's very helpful. I think that also maybe in those gaps, I've always been impressed with how quickly you are to get through emails and texts, and somehow you're on top of this. Meanwhile, with my little company, I'm getting overwhelmed with 150 emails by the time I land. Do you use those 15-minute times as well to keep your inbox clean?
Okay, so yeah, that I had a rule, which I think I may have told you someday, one of the evenings we were together, that if you emailed me or called me or texted me, my job was within 24 hours, no matter where I am, in which time zone, I had to come back. And that was important. And I think if you think about it, you're an entrepreneur. And the firm I'm with now, General Atlantic, if you asked anybody at GA, what's GA about? They'll say entrepreneurship. So what's the first trait of entrepreneurship? Risk-taking. What's the second trait of entrepreneurship? A sense of urgency. What's the third trait of entrepreneurship? Responsiveness. Do you know an entrepreneur who doesn't take risks, doesn't have a sense of urgency, and doesn't respond? I don't know anybody who calls himself or herself an entrepreneur and doesn't do those 3 things. Entrepreneurship is those 3 things. I want to be an entrepreneur, so I got to respond. I think, early in my career at MasterCard, and this may or may not be part of your discussion finally, but early in my career at MasterCard, I went to Russia on a trip, and I got asked a question that I couldn't answer because it was about a promotion recommendation for an employee way down in levels, and it had taken 6 months for someone to reply. It went into a black hole with no answer. I put out an email to the company saying, henceforth, if you ask me for approval, Kayan, if I don't reply in 5 days, it's approved. So what it did was it moved the onus from you, who's asking for approval, to me, who got asked. If I don't say yes, it's done. I could say no. I'm entitled to. I'm the boss. I could say no. I could say, I don't know enough. I need to find out more. But I cannot not respond. And if you look at most companies, the death of companies is the black box. You send something and the damn thing never comes back. You don't hear back for weeks. So entrepreneurs cannot tolerate that. That's what makes entrepreneurs who they are. They're edgy. They do things. And that's what I admire about GA. They take a risk, but boy, you get a response.
Which leads us to my final question for you, which is, what are you doing now? Can you tell us what you're doing with GA and what you're up to?
I'm vice chair there, which is basically, what happens when you get kicked up the ladder up enough to be called something. I spend my time with a bunch of different things. One is I'm trying to spend time with CEOs of our portfolio companies, whom I think I can be helpful to, either because of subject matter expertise or because of leadership methodologies and skills, or because of just being able to manage complexity geopolitically or in different forms of complexity that I may have had more experience in over my 40 years of working than they may have had. By the way, the upside of that for me, so the downside benefit to me is I get to work with amazing young entrepreneurs who excite me and push me. So that's one part of my job. Another part of my job is when the company is looking at investing in something where I may be able to help with something. Again, from subject matter expertise in payments or cybersecurity or data or artificial intelligence or banking, cryptograph, consumer products or geopolitical sensitive stuff, then they'll involve me to the extent I can be helpful. And I enjoy that as well. And the third thing I'm trying to do is to spend time with management teams in the company and see if I can be helpful in developing process, culture. That part is very early days. And frankly, I'll only go if I'm wanted in that. I'm not trying to impose this on anyone. If they think I can be helpful, I want to be there. But really what I'm trying to do through all this, Kaihan, GA has an amazing portfolio in education, health, financial services, and climate. And they're building all those four. To me, those are the two issues of inclusion on the one hand and green on the other hand that I think long-term capital was into. So that's what I'm trying to work on. I'm trying to work on those things.
Sounds like a house on the hill that is worth pursuing. Excellent.
It's a lot of fun. The good news is it's very smart people who actually are very keen to get outside in thinking. And so what that does is they have this receptivity of talking to you and asking you for your opinion. So you're kind of pushing on open doors, if you know what I mean.
That's great. That's a great way of putting it. Again, I have so much more that we could learn from you, but we are reaching the top of our time with you. Anything that you want to leave us with or anything that I didn't get to ask or you didn't get to say?
No, just that if your audience is strategy officers, just remember where we started from. You really can transform a company by the simplicity of that city on the hill with the pathway to get there. But the key word there is the simplicity. The more complicated your strategy is to explain, the more difficult it will be for you to reach the top of that hill.
Yeah, beautiful. I think that needs to be a book of yours at some point. Part of a book of yours.
I hope you don't need one more book to inspire
Ajay, thank you so much for being here and sharing your experience and advice. It was really a pleasure.
It's a pleasure, Kaihan. Thank you for having me.
Thank you to our guests. Thank you to our producers, Karina Reyes and Zach Ness, our editor, and the rest of the team. If you like what you heard, please follow, download, and subscribe. I'm your host, Kaihan Krippendorf. Thank you for listening. We'll catch you next week with another episode of Outthinkers.